Is there really a perfect time to buy or sell stocks? I'll debunk this in this video. What is happening, everybody? Jason Schappert here with Moolah. Again, like, subscribe. We're in the business of setting you up on your course towards financial freedom. We're talking all things investing, whether that's stocks, real estate, savings, getting debt-free, anything related to your financial freedom. That's what we're all about here. I'll be sharing more about my journey with that as well. And of course, investing in stocks is a big part of that. And a question you get asked is, well, do I buy now? Do I sell now? First off, a little disclaimer, I'm not an RIA or anything along those lines. I'm just a guy passionate about personal finance and passionate about setting my family up for future success as well, and helping you out by sharing some of that wisdom that hopefully gets applied. Is there a perfect time? The answer is really, not really. The perfect time is let's get started now. Stop trying to time the market top, the market bottom. Even the pros with all their algorithms and all their large language models and AI can't pull this off yet. All right, so stop trying to time it. Instead, use a technique that I use in my own financial situation, which is called dollar cost averaging. The goal is to lower my cost basis. It's essentially, in plain English, it's the average price of all my shares. That's the average price I own at when you average all my shares out. Let me give you a real world example. Ford, great company, great stock, but it hit a little bit of a rough patch. Missed some earnings, some bad news, electric vehicle issues, things happen. But I think we can all agree Ford's gonna be around for a long time. Ford's a good company. Ford stock slipped a little bit. So let's say I picked some up around $11 when that slip began, but it continued to slip. So I picked up even more, around 10 bucks. I think the lowest I ended up buying was somewhere around $9.75. So I started buying a little bit at 11, bought even more at 10, even more at $9.75, and all I'm doing is dollar cost averaging. As it's going down, I have faith in the US economy, I have faith in Ford, I continue to buy that average down, bringing my cost basis to, I'm making up a number, say $10.10. Even though my first ones I bought, my first shares, were at $11. I averaged on the way down. Now, as of this video, where is Ford? Well, I guess it depends the day it posts. But again, I'm hanging on to these things for a long period of time. I'm gonna enjoy Ford's dividend. I'm gonna hang on and know that they're gonna turn this thing around. The fundamentals are there, everything else is there. It's dollar cost averaging. I didn't wake up and say, I'm gonna wait until the 52-week low of, last I checked, I wanna say it was like $9.49. And I'm gonna wait till this candlestick does this and this inverted. I don't get that fancy with it. I use dollar cost averaging, buying great companies that had a little stumbling block, a little negative news, missed some earnings reports, somebody posted something bad, whatever it is. You know these companies are going to turn around and use dollar cost averaging to utilize that. And again, Ford is just an example. And again, I'm not an investment advisor or anything. I'm just sharing some things that I've done in the past to use dollar cost averaging. Again, with all of this, you've got to diversify your portfolio. Please don't we're not going to Vegas, putting everything on black. That's not how this works. You've got to diversify your portfolio. Let's buy a smart, low-cost index fund, something that mimics the S&P 500. ETF is a great way to do that, but you have to diversify that portfolio as well. And lastly, with all of this, the companies have to have the fundamentals. Just because you like a company, just because you buy everything they produce, doesn't always mean it's a great, profitable company. You have to truly know what you're looking at and know and understand the market fundamentals. Don't go off tips that people give you, right? Tips are for waiters, they always say. Don't go off the next hot stock tip. It's not true. And by the way, me mentioning Ford is under no circumstance a stock tip. I'm just sharing with you an example of dollar cost averaging in that example. So don't go and all run out and buy that just because we said that. That's not at all what I'm recommending. Again, I hope you will follow us here at Moolah for more great tips on just how to really set yourself up for financial freedom. Have a blessed, abundant, outstanding rest of your day. See you.